Good morning. Welcome to TO Trade Sunday session, July 16th, 2023. Looking at little Forex Factory. Quiet week. We should actually just do the whole month here. We've had a little bit of a summer siesta and we're back on the grind. 4th of July weekend, you had 4th of July OPEC meetings, FOMC. We did get right before this, we did get the Geneva conference or whatever it was, where Powell talked about double rate hikes. We did see inflation come down. We had CPI just last Wednesday. We did see CPI come down to, where am I not finding it here? We did see CPI come down to 3% here. We did forecast 3.1. If you look at the graph on this, if you want to do a little graph in here, 3% inflation is basically April of 21, right when all the craziness started. If you go back to, January 2020, that's where we were at, 2.5 actually, it looks like. So 3% inflation is crazy. 2% is the Fed's target. So he's also looking at a lot of jobs, but I mean, if we're already on track to go from, what is this? This was 9.1 high in July of 22 down to 3. I don't know. Do you need another pause? Like you had this pause last time. We dropped 1% from 4.0% to 3.0%, and he didn't raise it. So I don't know. That's going to be the big news story once we get cut back up here. We've got kind of garbage Monday, Empire Manufacturing, whatever, retail sales, whatever. Building permits, whatever. Unemployment claims, I don't know, unless it's a crazy mess Friday, whatever. The big thing is you're going to have to wait for this. Wednesday, July 26th, FOMC statement, federal funds rate. Looks like they're not yet given an actual forecast. I know you can look at the percentages, the finance people, what they're saying we're at. I don't know what he's going to do. I think, we're going to have to see. From the moment the Fed announced it was going to hold rate steady, it seemed like they were going to have a future rate. I don't know what's going to happen. That's really Wednesday, July 26th. You're going to have the Fed interest rate. And then after that, I mean, that's it. That's the mover of the whole month. We did have that CPI was a big shaker last Wednesday, but now I would say wait for that, and I would be very careful for that. That is later in the day, too. So you could have a decent day Wednesday, although honestly, you're probably going to have a lot of garbage until then. If we want to look at what we're getting at, this is Sunday session. We're going to start with GU. We haven't been at GU in a while. We got a lot of garbage on here. I think we're just going to take all this off, or we're going to start fresh. Start fresh on our 4 hour. This 1.3 line was a big line. 1.3, I think it's a big psych number. If we just chop down a couple, let's see where we're at. And boom, that 1.3 number that we put without even looking, that 1.3 psych number, which we can even probably put as a 1.3000, big old psych number, really kind of got respected here in this. This is March, April 2022, really got respected. If you want to look at your next line, I think you gotta maybe look left. I guess there's not too much left. Yeah, that line. This line here, kind of, I think that's a 131,730. That's not a bad line. If we wanted to make another one, I think we probably would end up going up to this 133,633. I think that's pretty good. I do like, that was obviously a big cleanup there, and we shot all the way up to here, which was so close, so close. I mean, it matched this last little spike. And now we're actually sitting at this other spike. But I think that 131, I think you got to end up getting up there. I don't know if we're going to come up and tap it and then we're going to drop, or if we got to just maybe clean some of this up. If we clean some of this up, I would probably assume that we're going to get into, call it this range. I'm not going to make a line there. I guess I lied. We'll make a little ray over here on the corner. So I don't know exactly. Yeah, we'll just end up cleaning that up. We got this box down here. We'll set something up here. for the gram just to get a nice clean screenshot. 1275, 1275. Nice little line on the bottom. You're also going to have 1285, 1285. We'll just chop that down a little bit. There's just one through flat 130. Then we're coming in with a 131. We'll call it 131750. The old 131750. Make that back to a 40. Yeah, I think you got some decent range here. I think we had a good spike there with the dollar losing a little bit of value comparatively. I do think England has the other thing. I guess you want to bring up GBP. You do have we had some GBP news. We got GBP year over year inflation Wednesday. I guess I don't know why both of them aren't coming out at the same time. Maybe that's what they do, but Wednesday morning. It's gonna be Wednesday, London. I'm central right now, so 1 a.m. Wednesday. So London Wednesday this week, this 19th, is gonna be GBP inflation. I don't know. They went. I mean, look, they went. From 11, and then they were kind of stuck at this 10. They shot back to 8.7. They stayed right at 8.7. They didn't move. They think 8.2. I mean, I don't know. To me, that's such a drive up. And I guess maybe the bell curve's going to flatten back down here, but they look like I think they're going to have some hard times ahead for them. Back on the grinds. GU, I really would like to see us grab that. And then I think you got to have a little bit of a break here. I mean, you got a pretty large gap. But if it goes back up, I guess we'll add, just who knows what's going to happen. That's a 1-3-3-6-3-3 is what that is. So that could be the top target. Eyeball that. Not saying we're not going to have, a pile of chop in between, but that's what I got for GU. Gold, we could leave our gold levels. I like our gold levels. Gold levels, I feel like, they stay here for a long time. This I made up the other day. We did have a little bit of a grab up. I would say that we're in this kind of accumulation zone, and this accumulation zone is what we were in at the beginning of June. Here we were thinking about maybe if we broke, and we did kind of break, but then we had the chop, and then we could really drop back down. Here, do we got to get back down and get some liquidity? Do we want to push back up to that 1982? I do have a little box here, mostly just because of this kind of wick high point. So I don't know if we are going to get a drive into here. I would be careful. That could just be a wick high. I don't know. I think to me, I mean, these levels are pretty valid on gold that we got to kind of get out of here. And I don't even know if I would play a lot of breaks here. You're almost gonna have, I guess, you're almost gonna have to get a break and a retest, but then you get something like Wednesday's numbers, and you don't get the retest. But I mean, if you don't get it, you don't get it. But you got some pretty decent spike ups. I guess your spike lows are bigger. Does that mean you're grabbing liquidity to go higher, taking out stops? I don't know. But I really would just watch this range, this 1955, 1965 range. I would maybe hang tight. I mean, look, this is like, what is this? This isn't after hours on SPY. This is, 4 hour gold. This is 3 days of gold on a 4 hour. And to me, it just looks like garbage. So I would be careful on gold. Big bad ES. Big bad ES. If we want to throw some real levels out, I guess, just to get, you got 4,500, which is going to be there. You got, I don't know, I'm going to bring some attention back to this 43.25 because this is a big old gapperoonie on every indice, whether you're ES, SPY, SPX, whatever your indice is, your pair is. This 43.25, if you look back to June, we had a big gap here that never got taken care of. And we might have to dip back into here. I think a lot of people probably were waiting to dip back into here and kind of got screwed. I know I was. That's why I really didn't take any of this dump because I really was just waiting to come back down and gap fill, and then we could probably go crazy because we were stuck in this range. If you want to box out a range here, we were stuck in this range. Just this is January 1st, right? Kind of stuck in this range. Obviously, we had some increasing momentum here. I mean, however you want to put that through, but we came out, we broke back down. We had a little retest, broke out, had the retest, shot back up. I mean, I guess there was some signals that it was serious, but I don't know. I'm a fundamental bear, I guess. And I missed it. A lot of people took it. A lot of people made a pile of money. I don't know. I think I was waiting for kind of a break back down a little more. I mean, that was obviously a big show that we were going up, but again, I think I was waiting for kind of a break back down. We got back settled at this, 4,400. We kind of got settled and then retested, and then you could have said from there, that was the break, and then even that big break, we broke the high of that, didn't come all the way back even to fill this little gap. Whether you want to call it a fair value gap, whatever you want to call this, order block. And there's a lot of, depending on who you follow, there's a lot of different terms out there, but there's a lot of open price action where I think you can you could say whether we're going up or not, and we hit the Fed soft landing, inflation's already at 3%. Whether we're going up or not, I think there's a lot to be said for, getting a retest back and then cruising. With that being said, again, I'm going to say that 43.25, I'm still kind of watching. And then up here, you got to go all the way, to find a real level, especially on this 4 hour. I mean, this looks like pretty strong. This is like a 46.25. We'll call it a 46.25. Otherwise, I mean, you got a lot of, Apple's breaking highs. They got more cash than anybody in the world. Uh, do we get all the way up there? I don't know. Does all these chips that have been popping, do they come back down? Do they stay up there? I don't know. Want to look at a little UJ. Gonna delete some of my drawings here, but not all of my drawings here. Obviously we don't really look at a lot of UJ, but it's kind of what you get in the later, I don't want to trade Asia, but you get like a later New York, and I don't know, you have like a weekday or inflation numbers come out during the end of the day or FOMC or something. It is nice to get a little bit of UJ. The thing about UJ, if you're not used to it, and especially if you're kind of doing a 4 hour bigger positions, is that the lot size is messed up because the pip size is messed up. The pip isn't the fourth one; it's the second one. And I don't know, not that that has to matter to a lot of people, but I don't know. It's always one of my things where I was like, that's weird. Every other thing is like this, and then this one thing is different. I remember looking at UJ during this big spike, big fall, this last fall, this craziness, absolute craziness. Everyone, the BOJ stepping in, everyone waiting for the BOJ to step in. That 150 line was such a crazy line. You wicked everybody out, came back down. I think if you like UJ, I think you're in it for the ride. That's for sure. But had a really nice drop here, and honestly, obviously you got to have your eyes open during Asia, but the absolute most perfect pin bar doji dragonfly setup ever. I mean, entering, a pin bar, break a high, wash the low, and just, you would have hit this kind of point here, but still, you haven't broke a low. Just get this out of here. But if you look at it, you still haven't broke a low, haven't broke a low, haven't broke a low. So, I mean, this is the Friday bar, and then you're going to have your Sunday breakfast bar in here. But so we'll see what happens. But I don't know. Could you get a ripper up? Maybe. We'll see what happens. I do want to take some time to look at the VIX. A lot of talk about the VIX. We're actually going to switch over, I think, to this one. switch over to the Vixer. This is a Vic. This is people talk about summer slowdown. Summer session. I just took a little bit of the VIX here. I do have there's an alert at 15. Uh, so I do have an alert set for 15 on the VIX. It did go off last week a little bit, but I do have an alert set for 15 on the VIX. That seems like, a nice point of volatility. These boxes are the summer session. These boxes are June 1st to August 31st. So June, July, August, middle 3 months of summer quarter. And you can see we got the drop here. You can see here, obviously this is crazy, but this is this is summer of 2022, last summer. A little bit of a spike, and then obviously the whole July into August. July, August was just absolute drop in the VIX. Then we came back up, whatever. This is our big March spike. And let's go back again. Let's go to 21, summer 21. Had a little bit of highness, came back down, came a little bit back up. Obviously, it's a VIX, it's choppy, it's a little crazy to look at, but you can just kind of see the effects of the summer session. I mean, this summer of 20, this is a COVID summer. So obviously, if you want to see the VIX have the absolute craziest jump, this is, February, March 2020. And even there, with this, crazy highs, which it's not the all-time high. If you look, this 96, I was going to maybe bust this out later for you, but if you look at this 96, this is 08. This is October 08. This is the housing market crash. So still COVID was still shy, call it, almost 10% shy of hitting the 2008 financial crisis, recession, whatever you want to call it, VIX highs. So we didn't break highs. Also on the low was November of 2017. So must have been a pretty weak period there. I wasn't trading, but we're still pretty far. That was, call it an 8.5. We're currently at a 13, so there's room to go down. Everyone talks about the VIX reverting to the mean, and we might want to cruise back up. And there's a lot going on with the Russia-Ukraine. There's still definitely room to go down. We could go down, as a percentage-wise, 14 to 9. I don't know. Is that 30%, 40%? We could still drop a fair amount. But if you want to be really optimistic, we still got a little bit of room to go up because we never hit our peak. But so let's forget about COVID, right? Let's go before COVID. If you want to go before COVID, a real drop in July, some kind of big spike. I don't know what this was. Kind of weak under that 15 line. You got your spike on either side. Weak. This is 2017. And I didn't really go back there. You start to get a little more volatility in that, 20, after kind of 08. But that's still, if you look at the 08 spike, you didn't really hit your real drop where I would say your average month was under 15 on the VIX until 2014. So it took 6 years to drop from the 08 highs to, let's call low volatility. Let's call an average month under 15. Let's call that low volatility. So it took you 6 years, basically. Let's say 5 years, I guess. We're getting 2013. This was end of 08, more kind of 09. So let's just call it 5 years it took you to reach your high volatility to, a period of low volatility. 5 years. We went from almost as high of volatility to, a solid period here of low volatility. I think July might kind of finish out the same way, and then I'll really end up looking at August. But this was just about 3 years. So does that mean that, hopefully we're maybe in one of these lower spikes, and then we get, we're going to get another 30, 40, 50 month VIX? Maybe. Go to the VVIX. The VVIX is the VIX of the VIX. And I got a VVIX line set at 100. Call me when it hits 100. Look at this. Look at June, July. This is all, yeah, we're selling it daily here. Yeah. Wow. It's so crazy that got me all messed up. Because if you look at this, this is COVID. COVID's right here. You want to see COVID? This is COVID. So the VVIX has had some really good moves. I remember that flash crash 2018. I know that's a big topic. And then this is, I don't know, this almost looks like the Trump election kind of here, getting crazy. But this is that 2018 flash crash. And then otherwise, we're staying kind of here. If you want to go look at the lows, we did pop out a low. You get this 2014 lows, which was the low volatility period that we looked at after the '08 crash. Again, we still got room to go lower, but we for sure could go a lot higher. This doesn't really go back to '08. You get kind of this weird scatter plotty whatever data here, but again, I think, a VVIX over 100 would be really nice, and then a VIX over 15 would be really nice. I think until then, it's going to be a little bit quiet on the Western Front. Um, stay safe and don't spend less, just earn more.